This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set to follow Wall Street higher as Treasuries halt a sell-off. The Nasdaq 100 halting a 5-day slide ahead of Nvidia's earnings report later this week. Donald Trump's team said to be considering pairing the former Fed official Kevin Warsh and hedge fund manager Scott Bessent in leading economic roles. Also ahead, Bloomberg learns that the US will push Google to sell off its Chrome browser in a historic crackdown over its search monopoly. And we speak exclusively this hour with the Standard Chartered CEO, Bill Winters, for his outlook on the business and China's recovery.
Take a look at how U.S. futures are coming online. We're seeing really not a lot of movement after those small gains in the overnight session. We were watching those tech stocks, the Nasdaq 100 futures not doing much, but we actually saw it outperform. We're talking about really halting the longest route since January as we await Nvidia results as well. We're even talking about Chinese stocks on the Golden Dragon Index, seeing the best day in over a week. But the trend for those Chinese stocks has been to the downside, right? Especially with concerns about more tariffs on Chinese goods. We actually had those ETFs investing in Chinese stocks see record outflows for 5 consecutive weeks when it comes to the iShares China ETF, the record outflows last week alone. We had Treasuries also gaining a little bit of ground, but this was only because we had some dip buying after 10-year yields rose near that 4.5%. So with yields coming down a little bit, we had the dollar also losing ground for a second consecutive session. But take a look at Asian currencies, because we had Asian currencies supported, but the Japanese yen not so much. We're talking about Japanese yen under pressure again towards that 155 level at this moment. And this, of course, after Governor Ueda spoke yesterday. He didn't really give any clear indication of when the next rate hike could be. We'll be watching the Aussie dollar, the Korean won as well, which saw the biggest gain in over a week. But it will really be about the trajectory of these central banks, Haidi, at a time of really a lot of uncertainty politically, especially with, of course, the incoming administration of Donald Trump.
That's right, and we're getting sort of more realization of what that cabinet is going to look like, with the US President-elect Trump said to be now considering putting former Fed Governor Kevin Warsh in the Treasury Secretary role, with Scott Bessent as Director of the National Economic Council. Bloomberg's political news director Jody Schneider joins us with more. So, this is the latest that we know, of course, and there's been a lot of names in the hat, and what seems to be quite a degree of infighting or sort of posturing for who, for example, Elon Musk had wanted behind the scenes.
Yes, that's right, Heidi. Elon Musk was said to be favoring someone who is now not being looked at, Howard Lutnick, who we are hearing, according to people familiar with the matter, that he is not in contention for the Treasury job anymore, even though Elon Musk had been pushing him. What we are hearing is now, as you noted, Kevin Warsh, a former Federal Reserve governor, is in contention, and perhaps with Scott Bessent, who has been said for many months to be someone that Trump would consider as Treasury Secretary, with Scott Bessent perhaps as the director of the National Economic Council. So that's a pairing we could see, although Bessent is still said to be under consideration for Treasury Secretary. We're also hearing Mark Rowan might be on that list. Robert Lighthizer, former trade rep, had been on the list, but what we're hearing is that as a contention, as a possible contender, might be too much for Wall Street, given some of his protectionist views. The question about people like Scott Bessent in particular, and of course Kevin Warsh, is, are they kind of America first enough? Are they in that group, the loyalists that the incoming president wants to see, and he wants to see their views on tariffs, for instance, matching his own. But at the same time, he really does value that Wall Street experience in this particular role. And that is what we hear is taking some of this time to come up with this choice. We heard that last week he was going to make the choice, and then, of course, it's taken another week, and we don't exactly know how much longer it's going to go on. And there was some infighting between the Lutnick and the Bessent camps, and we heard that is something that has delayed this and something that frustrated the incoming president as well.
And Jody, Trump's immigration team also taking shape. What do we know about his policies right now, especially when it comes to mass deportations that he's promised?
Yeah, so today, the former president and soon-to-be president again, Trump, confirmed via his social media that he would use the military, if necessary, to conduct these mass deportations. So that's a confirmation of two things: that he intends to go ahead with these, and that he would use the military if needed. Now, of course, saying he's going to do these and starting the process is different than these going forward. Other countries where he wants to send people may not be willing to accept them. And also, Congress does have to get involved in this process, and so it can get somewhat messy there, though, of course, the incoming Congress is going to be controlled by Republicans. The issue of money comes up. That's where Congress comes in. How the U.S. would fund this, for instance. The Immigration and Customs Service is woefully underfunded, and they would likely have to go to other places, perhaps the National Guard, which, of course, is part of that military option that President Trump has said he would be willing to do. That confirmation coming today.
And Jody, of course, over the next last 10 minutes or so, we also saw the announcement of Sean Duffy, the former congressman, being named as Transportation Secretary as well. So that incoming administration really taking place there. But interestingly, Thursday also marks a deadline involving what is the only criminal conviction of Trump among the cases that have been brought against him. What's sort of most notable about it, and what expectations can we hold here?
Yeah, so Judge Marchant in New York, he was supposed to decide last week whether to continue to go ahead with that sentencing, to continue that case in New York. As you note, the only criminal conviction of the cases that have been brought against Donald Trump, but he delayed it last week and said he will decide by this Thursday whether to go forward. Now, with an incoming administration, with Trump being elected again, this makes this immensely more complicated. If he was to sentence him, what would he be sentencing him to? How would they arrange that? What would happen with the Secret Service? Would this even, this would almost certainly go forward in other courts. What would happen with it? Or do they simply remove the case at this point, or sentence him to something that would not include jail time? It really is a big question. The other cases have all stalled, and certainly the ones involving the Justice Department have not moved forward at all. The other option would be, of course, they continue this for 4 years until he's no longer president, which would, of course, be an unprecedented move. We've never really seen anything like this. So we'll see by Thursday, Judge Marchant should decide what becomes of that case, that hush money case.
Bloomberg's political news director, Jody Schneider there. Let's get some views from the market side now. Joining us is Katy Kaminski, who's a chief research strategist and portfolio manager at AlphaSimplex Group. Katy, really great to have you with us. And, so much of the focus when it comes to the risks of the markets, and we have seen Wall Street and that sort of risk appetite start to fade a bit, right, as the kind of realisation of maybe the degree of uncertainty is starting to dawn. What's the biggest risk for you? Is it the tariffs? Is it, the implications of what mass deportations would do, or the fiscal side of the agenda?
Yes, I think the key focus has been somewhat on tariffs by many of the markets we follow, specifically the commodity markets. You've seen commodity markets definitely in a downtrend recently, but I think the general sentiment is a lot of these things are going to take time to sort out. So you had, in some sense, a very strong, what they're calling, of course, the Trump trade has been petering out as people are trying to digest. Does this continue, or how much does it continue, and where does it affect? And I think commodities is a good place to look if you look at aluminum, copper, other places. But I do think it is still really quite early to tell.
How do you navigate then that sort of opacity, right? Do you look at certainly sectors, or do you kind of look outside of the US for a way to try and hedge some of that risk?
Oh, that's a good question, because what you have seen is the U.S. has looked varied. I mean, there's been a lot of divergence, particularly this month. So the US has looked much better in terms of equity markets, but then you've also seen some rotation as well out of tech sector, a little bit more into favoring some small cap. But I do think it's going to be a question right now of looking at which asset classes are going to move in which directions as a function of changing policy. And I think as you look at things like fixed income, there's going to be moments for getting, locking in higher yields, but also sort of following some of the waves if we do need to price in long-term inflation, given the new, the change in policies.
It's all about NVIDIA's earnings this week as well, Katy. How much are you really paying attention to the AI exuberance that we've seen throughout the past year? And does this have still room to run?
This is a good question because I think everyone's eyes are on NVIDIA this week. The reason is it's such a gauge of where can this move go. So I think the market in some sense is seeing that as the pivot point to understand if there's more room to run or not. And I think there's mounting evidence that, things look still okay. But of course, things have moved so far that makes many investors nervous about potential pullback or slowdown of that particular narrative.
Are we going to see a pullback in the U.S. dollar? I mean, given right now the uncertainty over where inflation goes, over where the Fed goes, I mean, we have seen an incredible run-up, but could this continue?
Well, what's interesting is I've been asking the same question. I mean, if you looked at how far the dollar has moved in the recent period, it's pretty strong. And what surprised me is that later last week, even though we had sort of a situation where the stock markets were selling off and you expected there might be a slowdown in the dollar has actually remained steady, not reducing as much as you would have thought. And positioning is definitely strong in the dollar because a lot of people got into the dollar as a function of this particular trade, but so far you haven't seen that type of reversal yet. So we'll have to wait and see, but it's been pretty phenomenal that it has steadied despite that.
But that's also meant that with a stronger U.S. dollar, we have seen a lot of weakness in Asian currencies, particularly the Chinese yuan, given, of course, all of the narrative around the tariffs on Chinese goods as well. Are there any pockets in Chinese equity markets that you could still find value that could potentially be insulated from all of the geopolitical noise?
Well, I'm certain there are definitely some areas where you have to think about that buying opportunity. I think there's been a lot of pressure on Chinese equities for quite some time now. And I think at some point there has to be a point where there's a buying opportunity, but it's been really difficult and it's hard to be insulated from that particular narrative, just given that it's not even clear yet the ramifications and how extensive tariffs will actually impact Chinese equities. So I think the question is still, when is that buying point? When is that opportunity?
Katy Kaminski, good to have you with us, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. And we have more ahead on the Asia Trade. This is Bloomberg. Former St. Louis Fed President James Bullard says monetary officials don't have to move much to arrive at the right rate for the economy. But he tells Bloomberg he's not expecting the Fed to stand pat next month.
If it was me, I think they could make one more move here in December, and then that would put them at 4 3/8. And then there'll be a debate about where neutral is. But if you thought the median of the committee thinks neutral is maybe 3%, then you have to have maybe 100 basis points on top of that, or 125 even, because inflation isn't all the way back down to target. So normally you would take the inflation difference and then multiply that by 1.25 or 1.5 or something like that, and that's what a Taylor rule would do. That's going to put you right around 4%. So they'd actually be pretty close to where they'd want to be. They'd have another move to make, maybe in the first quarter or second quarter, and then after that, it would depend on where inflation went during 2025. So they're in pretty good shape here, I think, for the December meeting.
Jim, maybe for December, but moving beyond that, there's a real question. I haven't heard a lot about long and variable lags in a long time. And basically, there's this feeling that maybe if markets are flying and we have this feeling that businesses are doing just fine, that everything can chug along at these interest rates. And you alluded to it. We could see a higher neutral rate. Just how much have you heard a change in tone from Fed officials over the past couple of weeks?
Yeah, well, they've made 75 basis points of cuts already, so they're not in the same situation that they were in, say, June or July. And I think the growth scare that occurred in sort of the July-August timeframe has dissipated, and now you've got GDP now, Atlanta Fed at 2.5, and the last 2 quarters of growth have been pretty strong, certainly above potential growth rate for the U.S. economy. And so I think, they don't have to go too much further to be at the right rate for this level of inflation and an economy that's, moving along pretty well.
The former St. Louis Fed President James Bullard there speaking with Bloomberg's Lisa Abramowitz. Well, Bloomberg's sources say the U.S. Justice Department will ask a judge to force Google to sell off its Chrome browser in what would be a historic crackdown on a big tech company. Let's get some more from our Seattle Bureau Chief, Anna Edgerton. And Anna, what do we know?
We've been tracking this remedy that the Justice Department is going to ask from this federal judge since that landmark antitrust ruling in August. And the question here is really, how severe is this remedy going to be that the Justice Department is seeking? It could be just things like data licensing, a prohibition of the kind of exclusionary contracts that are at the base of this case. But we do expect the Justice Department to seek a breakup of certain divisions like the Chrome browser. Now, the Chrome browser is the most used browser worldwide, but it accounts for only 61% of the U.S. market. So, the fact that the Justice Department is going to ask the judge to force Google to sell that division is really interesting in how the Justice Department is thinking about the harms here and how to remedy those harms moving forward.
So what's right now the timeline for this case? What can we expect next?
The judge has set a 2-week hearing for April of next year, and that's where we expect the company to respond to these, to the remedy that the Justice Department is seeking, and the judge to issue a ruling on that. That will be decided by August of next year. That's the timeline we're working with right now. Of course, always subject to change, but looking forward to that April hearing to decide the remedy.
What sort of precedent, if any, would this set, and sort of implications for other cases going forward?
Yeah, there's been a lot of comparison to the Microsoft case, and when the U.S. government sought to break up Microsoft, more than a decade ago, and it's hard to find a precedent now just because technology has changed so much. And what we see in this case is the Justice Department looking not just at what the technology industry looks like right now with search and mobile and all of that, but also what the technology industry of the future is going to look like, especially when it comes to things like AI and how that's going to change market power in the technology industry.
Our Seattle Bureau Chief Anna Edgerton there with the latest, and more ahead on the Asia trade. This is Bloomberg.
The G20, of course, underway right now in Brazil. The first day is done. We're headed towards the second day. And Heidi, there's still a lot of disagreements. We're working on the final communique, but we are hearing that some leaders want stronger wording when it comes to Hamas and also against Russia. What was interesting was that also you were seeing those disagreements even in the family photo. You're supposed to have all the leaders together. And we heard that President Biden, Prime Minister Trudeau, Meloni all actually missed the family photo. The U.S. is saying that the photo was taken early, but organizers are saying that President Biden was late.
you know how hard it is to get a group photo with colleagues, with family, right? I mean, it must be a very hard thing to organise with all these world leaders. But, you know, this snafu kind of perhaps is just an illustration of how hard it is to get all these global leaders on the same page, right? They couldn't even get on the podium at the same time for this traditional family photo. And does it really kind of speak to, as we saw, of course, afterwards, President Biden putting his arm around Meloni's shoulder as they walked off with Trudeau, perhaps a metaphor for just how difficult and how immense these challenges are, with all the leaders getting in the same, you know, mental place on issues like climate change, like the war in Ukraine, and, you know, so many uncertainties coming from an incoming Trump 2.0 administration, how that kind of gels with China as well. We did see talks between Australian and Chinese leaders as well throughout the course of the day, and really kind of trying to establish a stronger relationship between Canberra and Beijing. The meeting between Albanese and Xi Jinping really trying to cement that strategic partnership that in the past has been rocked by trade disputes, and we know that trade is, you know, front and centre as well going into the next 4 years, particularly for a lot of these externally exposed countries like Australia. So we'll be back, of course, with all the latest from day 2. As you know, as Shery mentioned, we're hearing of perhaps some disagreement on how firm that communique and the wording is going to be.
And of course, we have other stories that we're following at the moment, especially on geopolitics. Ukraine's allies pushing Volodymyr Zelensky to consider new ways to get Russian President Vladimir Putin to the negotiating table. 2 European officials say there's a growing recognition the Ukrainian leader needs to compromise, as neither side can secure victory. We're told German Chancellor Olaf Scholz also urged Putin to engage in peace talks in a recent phone call. Lebanon and Hezbollah have reportedly agreed to a U.S. proposal for a ceasefire with Israel, with some comments on the content. An aide to the Speaker of the Lebanese parliament told Reuters that a written response was delivered on Monday to the U.S. ambassador. The proposed terms required Hezbollah to have no armed presence in the area between the Lebanese-Israeli border and the Litani River. According to the report, there has been no immediate response from Israel. A Singapore court has sentenced oil tycoon Lim Ong Queen, also known as OK Lim, to 17.5 years in jail for cheating HSBC and instigating forgery. The judge says a deterrent sentence is justified and no concessions would be made for Lim's medical condition. The 82-year-old founder of Hin Leong Trading is appealing. Lim and his children earlier agreed to pay $3.6 billion in a separate civil case.
Taking a look at the moves we're seeing across Australian assets early in this session, of course, heading into RBA minutes from the November policy meeting. We're seeing Aussie bonds extending those gains ahead of the release. Treasurers looking for any clues that could shift pricing. That currently favours a move in the second quarter of 2025. We're seeing the Aussie and Kiwi dollars holding more or less steady at this point after posting some overnight gains. We're seeing the Aussie perhaps weakening a little bit, but still above that 55 US cent level. That support of the October 2022 low could come to kind of try and protect against the next low, which is what we see from August 5th. This is Bloomberg.
A Hong Kong court will today sentence dozens of former democracy advocates in the city's largest national security trial. The punishments are likely to further deter dissent in the finance hub and attract condemnation from Western governments. China correspondent Min Lo joins us now from outside the West Kowloon Magistrates Court. Min, what can we expect today?
Am I supposed to hear?
Yes, I think we don't have the connection to Min as of yet, but we'll try to reestablish that connection. She was our China correspondent, Min Lo, of course, in Hong Kong, Haidi, as we await that sentencing today.
Yeah, we will be getting the latest on that, watching that very closely. In the meantime, though, let's get you a look at the markets as we're just about 30 minutes into the start of cash trading here in Sydney. We're getting that staggered open, sort of more and more coming online. A little bit of upside, about 0.3% there. We're seeing perhaps stronger moves when it comes to Aussie sovereign bonds, extending those gains ahead of the RBA's November meeting minutes. We're looking for kind of a potential signal of a shift in market pricing when it comes to when the RBA might join that easing cycle. At the moment, we're looking at the second quarter of 2025 as being kind of kick-off at this point. We did hear from, in terms of the effectiveness of monetary policy from the RBA, from the Reserve Bank of Australia's Assistant Governor Christopher Kent, speaking on Monday, saying that the sort of estimates on GDP and inflation declines have been kind of pretty close to what we're seeing other major economies, including the US, the UK and the Euro area as well. So we'll be watching those minutes very closely there. The Aussie dollar seeing a little bit of support at just about 65, that 65 US cent level. Elsewhere around Asia, though, this is the picture as we look at Nikkei futures trading a little bit to the upside. It looks like broadly, regionally, we will see that tracking of Wall Street higher as well. Treasury is also halting that sell-off, which we saw 10-year yields at about 4.5%, Shery.
And Heidi, these are some of the top corporate stories right now. Goldman Sachs is talking with potential partners as it plans to spin out its digital assets platform into a new company. Goldman's global head of digital assets, Matthew McDermott, told us plans are in the early stages, but the target is the next 12 to 18 months. Electronic trading platform TradeWeb also says it will work with Goldman on new commercial use cases for the platform. NVIDIA is teaming up with Alphabet's Google to pursue quantum computing technology. The company's announced Google will use NVIDIA's EOS supercomputer to speed up the design of quantum components. The idea is to simulate the physics needed for quantum processors to work, helping overcome current limitations. This could make machines much faster than today's chip-based technology. Xiaomi's quarterly revenue surpassed expectations as the smartphone company gained a foothold in the cutthroat EV sector it entered in March. Xiaomi says sales rose 31% to nearly $13 billion in the September quarter, with over $1 billion coming from its EV business. It also kept its spot as the world's third largest smartphone maker, with handset shipments up 3.3% in the quarter. China's biggest express delivery company, SF Holding, is planning to raise nearly $800 million in its Hong Kong listing. A filing shows it's offering 170 million shares at up to $4.66 apiece. Trading is expected to begin on November 27th. Meanwhile, sources tell Bloomberg a Xiaomi unit is among the cornerstone investors in the share sale.
Shery, let's get back to the Hong Kong court. Expected today to sentence dozens of former democracy advocates in the city's largest national security trial. The punishments are likely to further deter dissent in Hong Kong. It's already attracted concern and no doubt condemnation from Western governments. Let's get back to our China correspondent, Min Min Lo, who's outside the West Kowloon Magistrates Court. So, Min Min, what are we expecting today?
Yeah, it's a very cold, wet, rainy morning here, and there is heavy police presence outside the Kowloon Magistrates Court. If you can pan the camera, you can see on the right side of me, there are plenty of police stations here. There are wedge barriers by the side of the road, and you can't see, but around that corner is a long queue of people really wrapping around this court building. They're hoping to get a seat in that public gallery, and if not, in that overflow room. Plenty of interest following this mass sentencing, really something of an unprecedented scale of sentencing under the national security law. These are 47 activists who were arrested back in January of 2021 for participating in this non-binding unofficial poll to select candidates for an upcoming legislative election. And the intention of the defendants at that time is to secure a majority, essentially to conduct an unofficial primary in order to get enough power to be able to block the city leaders' agenda and to theoretically be able to force Carrie Lam at that time to step down. But of course, they were arrested, and out of the 47 people, 16 of them had pleaded guilty, and of the 16, 14 of them had been found guilty and 2 were acquitted back in May, and another remaining 31 of them had pleaded guilty in the hopes of getting a reduced sentence.
And Min, this is really drawing the attention of world leaders, right? This is what the UK Prime Minister had to say. Take a listen.
I'm very pleased that my Foreign Secretary and Foreign Minister Wang met recently and discussed respective concerns, including human rights and parliamentary sanctions, Taiwan, South China Sea, and our shared interest in Hong Kong. We are concerned by reports of Jimmy Lai's deterioration health in prison.
Min, what else are we hearing from the international community?
Yeah, I think you could see that the British Prime Minister was barely able to register his concern before the British press were bundled out of the room by the Chinese team, and that really underscores how contentious this issue is. It's drawn attention worldwide. You have countries like the US, for example, saying that this trial is politically motivated and calling for these defendants to be released. And because the conditions around this trial, many of the conditions have departed from common law tradition. For example, many of these defendants have already been in jail for about 3 years or more. They were denied bail, they are denied a jury trial, and instead they are being trialed by three hand-picked judges that are hand-picked by the chief executive, John Lee, and that is why some countries are criticizing whether the judiciary is independent. And of course, it is the business community that is also watching this very closely, because for a long time it is that openness, that independence of the judiciary, the rule of law that really underpinned Hong Kong's status as a financial hub. And we know Hong Kong, for instance, lost the status, the 51-year winning streak as the freest economy in the world to Singapore. Last year, it regained it again this year, but certainly is going to draw close attention from many people in the global community. We're expecting staff from the consulates from France, Britain, US, various consulate members expected to attend the proceedings today as well.
China correspondent Min Lo there with us, and Bloomberg has learnt that HSBC is asking hundreds of managers to reapply for jobs in the new corporate and institutional banking division as the bank continues to try and streamline operations. Let's get more from our Bloomberg Intelligence senior analyst Matt Ingram. And Matt, there's something very sort of Hunger Games about this, right? But is it necessary, and does this lead to operational efficiency?
Yeah, hi Heidi. Look, this isn't new news. I think this is probably the third iteration of trying to achieve this. HSBC, through a long 100-year legacy, has got a spaghetti network of, I guess, fiefdoms around the world, more than 40 countries, often with commercial banking, investment banking, retail banking, all vying for position in each of those markets. So yes, I think it is very necessary. It started with Stuart Gulliver maybe 15 years ago, this unwinding, but certainly necessary given the new CEO's cost focus.
This cost, the belt tightening, this has been several cycles in the making, right? So is it something that they're not doing quite right, that it's not taking effect as much?
Well, I guess it's a bit like playing Jenga, Heidi. You don't know which stick to pull out without the whole tower collapsing, and so this is the challenge that consecutive CEOs have had. Do I pull out this stick? Do I pull out that stick? Ultimately, you can slim down the tower, sort of continuing with that analogy, but it's really tricky to make sure you don't cut away flesh, you don't take away the wrong stick.
Especially in a rate-cutting environment around the world?
Yeah, well, this is the thing. HSBC is one of the biggest, most effective deposit takers in the world, and that makes it extremely sensitive to Fed rate cutting. And so they're going to have really significant revenue headwinds for the next 1 to 2 years at least. In order to prop up that return on equity, in order to sustain these excellent capital returns that they're generating, they're going to need to find some kind of profit driver somewhere. That might well be in unwinding these costs that they're talking about.
What's the capital situation looking like?
Look, HSBC and more recently Standard Chartered have announced very big buybacks. Obviously, with slowing loan growth across the world, they're going to generate excess capital. The more profitable HSBC becomes, the more they're going to have this capital that they can give back to shareholders. And I think what we've seen historically is that shareholders would rather get that money back than have the bank spend it on something silly across the globe.
That share performance has lagged the likes of Standard Chartered too and Barclays as well. But Bloomberg Intelligence senior analyst Matt Ingram here with us. And coming up next, our exclusive interview with the Standard Chartered CEO, Bill Winters, talking about the lender's business strategy, where he sees the opportunities across the region. This is Bloomberg. Well, top executives from the world of finance are gathering for the Hong Kong Monetary Authority's Global Financial Leaders Investment Summit. And this year, Beijing has sent the highest level officials so far to attend this event. And David Inglis, our co-anchor, is there to cover all of that for us. Dave, a special guest.
Yes, Heidi, and I'm trying to guess that what you just said there, it's getting quite loud here as we kick things off. Quite literally, things were quiet literally 10 seconds back, and as fate would have it, things are starting to get a little bit more alive here. We had to pass through, I think, 3 or 4 security checks before we get, just to give you a sense really of, the magnitude of who's going to be here, which we can get to in a moment. But joining us here on set, our first guest today, Bill Winters, Standard Chartered CEO, joining us exclusively here from the HKMA event. It's nice to see you and good morning as always.
Nice to be here.
You're here every year for this event.
Yeah.
I think we're here. What's the nuance this year? What's different in terms of the conditions of the economy, the operating environment?
This is the third of these events that they've done.
Yeah.
The first clearly was getting out of COVID.
Yep.
Last year was, I would say, the reestablishment of Hong Kong as a real business destination and hub. This year, I think we're slightly celebratory because Hong Kong's actually doing quite well. Signs of recovery. The Chinese market Chinese market is beginning to improve. Obviously, seeing significant improvement in equity markets. Sentiment shifting. We're far from done. We know that, but I would say now it's about really getting back to business and getting back to growth in Hong Kong and China.
I think the first panel of the day, and we have a fantastic lineup there. I think you have the CSRC regular, you have the who's who effectively of Chinese officials there. Do you think they've managed to put a floor underneath both the market, the economy, and sentiment? Those three can be separate things.
I think there's been good progress on all fronts. So I think the monetary stimulus, one obviously was stimulating the economy, but also put a little bit of a floor under the property price disaster. It's been a really bad recession in property prices, and we haven't recovered yet. And there are some nascent signs of recovery, but basically I think they put a floor under it, and it was a clear statement. We're not going to let this thing get out of control. The recent local government debt swap, I think, took another issue off the table, which was the local government finances, which we know that a lot of those governments were financed by land sales, which have gone to something close to zero given the property market. So just stabilizing that takes a big question off the table as well. There's suggestions that there will be further fiscal stimulus to get the economy going, but we all know that confidence is still quite low. Consumer confidence is low. International investor confidence is low. There's also some geopolitical stuff going on there. But local and entrepreneur and business confidence for investment is low as well. So you probably need one further jolt to get that engine going.
What do you think that would be?
Most likely fiscal stimulus. There could be a little bit more monetary. There could be a little bit more sort of directed social financing for small businesses, things like that.
Okay.
So I think we'll see those kind of programs. But we all know that China is full of animal spirits, and that the animal spirits were squelched for the past few years, given all the challenges that China has experienced. We got to get those animal spirits going again. I can tell you, I'm beginning to feel that in Hong Kong in a more material way. But China's obviously a much bigger place. It's a tougher ship to turn.
Yeah, we've been here, I think, the past 3 years as well, and I can tell the vibe and the energy is different this time around. The guest lineup, the location is slightly bigger as well. One last question on China. You put the banking hat on for me. Do you think it's a good idea to bring all that debt back onto the formal balance sheets, whether that's the banking system or the central government?
Yeah, I do. I think there was a big overhang for 2 reasons. One, it was unsustainable at a local level. So the alternative was some kind of default or perennial forced restructuring, which is never builds confidence.
Right.
And second, it wasn't very transparent. So we didn't know exactly how much there was and where it was. I think this just takes one big question off the table. Of course, there are lessons to be learned about financing local operations through property sales or property transactions. But this also frees up the local currency, the local government balance sheets for the kind of stimulus program that could come next. Because a lot of the implementation of any stimulus is going to happen locally. Right. It's not going to come from the central government. Now these balance sheets are freed up to really get the economy going again.
And is the sense you're getting to that officials have taken into bigger consideration the private sector and what the market and how the market actually feels about what they're doing?
I think the representation we're seeing here at this forum today, and at similar fora that I've been to in China this year, the government is all in terms of re-engaging the private sector in the most fundamental way. It takes time. These sort of confidence rebuilding things. But we've been through it in whether it's the U.S. or Europe or Korea or Japan. We've been through these transitions many times, and fortunately for me in my life, many times. In almost every case, it takes longer to get going, and then it happens faster than you thought.
Okay.
But I think we're in the get-going phase right now.
Right. Direction is clear, and at least in the right direction. Can I ask you about the U.S. economy? Doubts around whether the Fed is able to cut rates at the next meeting. Do you think they'll hold?
No, I think we'll get a 25 basis point cut.
Okay.
But look, the disinflation trend is still in place, even if the recent data points were much more ambiguous.
They've been pushing back, though, against just the expectations that they might deliver.
When I think about where we were, in the beginning of this year, we were going to see 150 basis points this year. Right. Now maybe we're going to see 75 or maybe 100. So the disinflation trend is obviously heading down. I don't think politics will come into question because there are no new policies at this point. There may be next year, but for now, we know that fiscal policy is still stimulative. Right? We know there's still a big budget deficit.
Yep.
We know that the labor market is tight, and we know prospectively there could be some further labor market tightening, mostly because of immigration. Call it reform or mass migrations. Pick your term. But for now, I think there's room for a little bit more movement. But I imagine the Fed will be quite cautious in their statement about further cuts.
And is it the right assumption to make that this cutting cycle will be not just shallow but fairly quick? Do you think they'll be, we'll be at the end of the cutting cycle before the end of next year?
See. I think it really depends on it's all about the data, as always.
Right.
And the data is it's quite tempestuous these days. But already we've seen a relatively measured cutting cycle. Given the pace of increases, the pace of reductions is relatively slow.
Right.
Big question whether we're higher for longer. A personal bet will be a little bit higher for a little bit longer. Okay. That's what the market's saying, and that's what I would expect as well.
That's better for the bank.
I think we're in that sort of sweet spot where rates aren't high enough to really impact credit quality.
Okay.
And obviously, moderately higher rates are good for our net interest margin. Right. So, I think it's a good environment for banks.
We're almost wrapping up the year, and I think your internal target for income, correct me if I'm wrong, is 10% on income for the full year.
Yeah, approaching it.
You're on track for that?
Yeah.
What does it mean for next year in terms of objectives as well?
So we see this year's been a very good year.
Yeah.
Pretty much in every regard for Standard Chartered. It's been a good year for banks generally, but it's been particularly good for us. It's starting with right here, right, with Hong Kong and China, which is continuing to grow at a very, very healthy clip. And we continue to have low loan impairments. As we get into next year, we would expect the impact of lower interest rates to kick in a bit. Our income growth this year has been, I'll say, flattered a bit by the roll-off of some hedges that were out of the money. That won't continue. It'll continue slightly into next year. So we'll have lower growth next year. It'll still be good, robust growth. Income should be growing faster than expenses. The loan impairment environment, the credit environment, still feels pretty benign, touching wood. Things like our wealth business are just going gangbusters. Plenty of market volatility, so our markets business is doing well. And we're continuing to gain share in key areas like cash management and trade. So hard to find something that doesn't feel pretty good for us right now.
I mean, you opened up a few doors there. So just very quickly on, trade financing, that sort of thing. Next year, the expectation is we might get tariffs. Who knows? Yeah. Is the expectation for more or less trade next year, global trade?
I mean, if we have a real tariff-related supply shock, you could see a slowdown in trade growth, but only while production recalibrates. And the Americans are going to buy these goods. They're not going to stop buying microwave ovens, right? And they could buy them from someplace else, or they could be manufactured someplace else. And that supply chain, depending on what the tariffs look like, will reconfigure.
Right.
I don't see a reversal of the trend of trade growing along the lines of GDP. And I don't see a permanent disruption to supply chains. There will be recalibration depending on what the tariff picture looks like. But yeah, I don't think the U.S. administration wants to tax the American public either with a big consumption tax, right? Which is what these massive tariffs would be. That would be quite inflationary for one thing, and it would be quite disturbing for American consumers. So I think it's going to be calibrated. There will be, no doubt, there will be lots of rancor, lots of volatility, and lots of noise. But ultimately, this idea that the globalization is going backwards, I just don't buy it. Right? 2/3 of the world is trading more than they ever have. Many of those countries are trading with China. Many of them are friends of the United States. They haven't cut off China in order to curry favor with either the Biden administration or the incoming Trump administration. So globalization is intact, but it's going to change.
Okay, that's fair. You know, I guess we just have to wait and see what those tariffs look like if we get them. On wealth, third quarter was fantastic for you guys as far as that's concerned. How big are you guys going? Give me specifics in terms of next year. Like growth, for example. How many RMs are you looking to hire, for example? What does it look like for you?
We're going to invest in $1.5 billion in our wealth business. We'll split that investment between additional RMs, so call it the old model, which works very well, and technology. So digital channels, digital advice, of course, using the full range of AI tools. You have to I have to drop the letters AI.
Yeah, you're smiling right now.
Into this discussion. You can count how many times you hear AI today. But in wealth, it's highly relevant. It really helps our RMs get better advice to their customers, and to collect and then digest huge amounts of data from different sources. So yeah, it's tech, it's RMs.
Okay.
We've got real momentum. We've been outperforming for some time. I mean, I'd say our success goes back 6-7 years, not 6-7 months. But we feel it's time to break out.
Nice to see you, Bill. Have a great conference ahead. Bill Winters, their Group Chief Executive at Standard Chartered. Back to you guys in the studio.
Yeah, David Ingles there in Hong Kong, and we have more lined up from the HKMA summit throughout the morning, including a conversation with Chief Executive Eddie Yu on these times on your screen. More ahead on the Asia Trade. This is Bloomberg.
Seeing Asian stocks tracking US assets higher. Take a look at FX. We're seeing the dollar down to open out the week. The yen is seeing still those declines, though, when it comes to broadly reaction to the Ueda remarks. A little bit of support that we're seeing for the Aussie dollar. Market opens are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After small gains in the overnight session, Heidi, we had tech really stopping its longest route since January. We continue to watch geopolitical news as well. The G20 underway in Brazil.
Yeah, in addition to, of course, some of the announcements really rounding out Trump's cabinet choices. Lots of question marks, though, particularly when it comes to these key economic posts and whether some of his posts, his picks are actually going to get confirmed.
Yeah, and what that really means for the economy and some economic policies coming from the Trump White House, especially at a time when we continue to see Treasury yields rising, the dollar also continuing to rise. We had a little bit of a halt when it came to that Treasury sell-off overnight, so we had the dollar under pressure for a second consecutive session. But take a look at how Japan is coming online, because the yen is really not doing much, but it was one of the currencies in Asia that, despite the weakness in the greenback, we actually had the yen also weaker, and that really to do with the Bank of Japan Governor Ueda really not giving any clear indication of when the next rate hike could be. We're seeing the Nikkei, though, gaining 0.4% at the moment, recovering from some of those losses that we saw in the previous session. As we continue to watch, of course, South Korea also coming online. The Korean won had seen some gains on the back of the weakness in the U.S. dollar, and we were talking about a 1 week high or so. We are seeing those gains towards that 1390 level, while the Kospi and the Kosdaq are now gaining about 0.1%, Heidi.
Take a look at what we're watching. We're an hour into the start of trading here in Sydney and going into an hour that'll give us those November policy meeting minutes from the RBA as well. And that, as we, of course, look for any signals or signs, that clues that perhaps that pricing of timing for the RBA to join the easing cycle might be meaningfully changed at all. So watching out for that. But we are seeing Australian stocks up by just about 0.6% there. We're seeing the Aussie dollar. We had seen some support for the Aussie as well as the Kiwi overnight, but it's looking like a little bit of a fade. 65.05 is how we're trading at the moment, and watching treasuries there as well. But let's bring in Garfield Reynolds, who leads the Markets Live Asia coverage, with us now. And Garfield, we were talking earlier, the moves that we saw overnight, were they meaningful at all? Like, does it sort of tell us where mentality is at the moment?
Not really, Heidi. I mean, in fact, even the biggest move overnight was oil jumping 3%, which was obviously driven to a fairly large extent by the news that Ukraine was going to be allowed to use missiles far inside of Russia. But even that move didn't really change a lot for the longer term view of oil, or even for the idea of a risk premium linked to geopolitics. It just took it back into the recent ranges, and you're still vulnerable to fresh downsides, because unless something really does ramp up on the geopolitical front, either to do with Russia or to do with the Middle East. But we had plenty of data that signaled the demand, the lack of demand and the too much supply is going to keep oil going to the downside. Similarly, the US dollar declined noticeably overnight, but if anything, traders became less certain the Fed is going to cut rates next month. And while Treasury yields came down, they didn't come down much. So there was very much a feeling of position squaring. Even stocks, where, yes, they rose for the first time in several days, the bleeding sort of stopped a little bit. But for stocks, we're all waiting for tomorrow when NVIDIA reports. That's the thing that matters this week. That's what's really going to set the tone for tech in particular, but probably for the market more generally.
Do you think there's room for quite a bit of disappointment? Because a lot of this has kind of been a bit of soul searching on where to next for the AI trade.
Well, it's certainly, NVIDIA is always pivotal, and it's also resolutely difficult to pick. We've had occasions when it beat expectations, but it kind of didn't beat them enough. I actually think that there's the potential for perhaps a little bit easier for it to set off a rally this time around, because it's coming in this sort of sour spot, and because the market is very much waiting for a trigger. We had the election, we had the post-election rally, which was a bit overdone because all of those concerns about how this might be a really tight election, we could be waiting weeks to find out who'd won or who hadn't won. Instead, we got the news on who'd won. That's released a lot of money that's been waiting on the sidelines to pile into either the sort of stocks that were going to benefit under Trump or the sort of stocks that were going to benefit under Harris. Now we're waiting to see what Trump will actually do, who he will get approved. There's a little bit of a phony war feeling in equities, but with that, if NVIDIA can do relatively well, and it's always a question as to what the market is going to seize on that relative front, I think it's set up for a fresh burst higher, because as far as the corporate setup, earnings, US economy goes, there's a lot of reasons for bullish momentum, at least in the short term. So I think it would take a severe disappointment from NVIDIA to seriously dent that. Having said that, of course, probably they'll beat earnings by a fair amount, and everything else will still fall. It's a tricky market to track right now.
A very tricky market when it comes to the Japanese equity markets as well, Garfield. I mean, it's been interesting that we've seen significant weakness in the Japanese yen, but when it comes to the equity space, it's been trading sideways since the summer.
Yeah, very much so. Part of the difficulty is that you feel like the yen's declines are potentially living on borrowed time, because the Fed is still cutting, the BOJ is still going to be hiking, even if it's reluctant. You also just have the optics that at 155 or so yen per dollar, that's sort of towards the top for the US dollar Japanese yen rate of the kind of permitted range, the range that has been able to survive without there being an intervention one way or the other to bring it back down. It's also about at the top of the range for which it's seen as being beneficial for Japan Inc. If the yen gets much weaker than here, that's the time when that precise uncertainty about whether it's going to reverse, and also just the general impact that has on consumer sentiment. The Japanese don't actually like having the yen this week. They can just about handle it, but if it gets much weaker, that really hurts the overall sentiment in the economy. So with all of that going on, it's hard for a weaker yen from here to lead to stronger stocks. So unless they get a direct lead, a clear lead from US equities, which has also been lacking, or from their own corporate profits, which have been a little bit muddled lately, then Japanese equities are probably stuck in limbo for the coming months until we get clarity in particular on what when the BOJ is going to pull the trigger on rate hikes, and how difficult or not that is going to make life for companies themselves.
Garfield Reynolds, who leads the Markets Live Asia coverage with a preview of the markets right now. And of course, a lot to do with where the Japanese yen goes from here. It has to do with rate differentials with the U.S. And where the Fed goes from here is to do with where inflation goes and where, of course, some of the economic policies that we could potentially see from a new Trump administration goes, right? So, Haidi, we've been looking very closely at some of those economic posts that President-elect Trump is nominating. We've been watching the Treasury Secretary post very closely. We're now hearing that President-elect Trump's transition team is considering pairing Kevin Warsh, he's a former Fed official, and the Treasury Secretary role with hedge fund manager Scott Bessent as director of the White House's National Economic Council. This is according to people speaking to Bloomberg, but there's a little bit of concern, it seems, in the Trump camp that Kevin Warsh may not be loyal enough to Trump's America First sort of protectionist economic agenda. So we'll continue to watch what happens to that potential nomination and appointment. We'll also be watching the Transportation Secretary role. That has gone to Sean Duffy. Trump said that he will nominate the former congressman to the post. We're also watching what happens to his nominee to be U.S. Attorney General, Representative Matt Gaetz. Of course, we know that there are many allegations of sexual misconduct, and the House Ethics Committee is looking into them.
Yeah, and perhaps a sort of dawning of the realisation that he may not be confirmed. But, we had talked about earlier, perhaps some of these picks, including Matt Gaetz, might just be sort of an opening bid and we could see some changes. But in the meantime, it's interesting, the markets continue to try and grasp onto expectations of Trump 2.0 administration policy, right? There's been sort of outsized focus when it comes to the tariffs and a potential revival of the trade war with China. But a lot of economists, Shery, are actually looking at other aspects of his agenda, including on the fiscal side, the tax cuts, but also the impact of these mass deportations that he and his campaign have repeatedly promised throughout the course of the presidential campaign, right? And this does look like a piece of campaign rhetoric that President-elect Trump will be making good on. We heard earlier that he'd confirmed his intention to use the powers of the US military to make this happen, to make these mass deportations happen. He's vowed that it will be the largest mass deportation in US history. He wrote "True" in capital letters on his Truth Social network early on Monday, replying to a post that said that Trump was reportedly preparing to declare a national emergency and will use military assets to reverse the Biden invasion through a mass deportation program. So we know that on the campaign trail, he's repeatedly pledged to secure the US-Mexico border by finishing the construction of his long-promised wall and carrying out these deportations of undocumented migrants with either the National Guard or local law enforcement agents being involved as well. And huge implications, of course, socially, but also for the economy in terms of what it means for inflation, what it means for wages and the broader labour market.
What really it means for regulation around the Trump 2.0 White House, right? Especially when it comes to tech giants as well, at a time when we have some news when it comes to Google. Take a look at how it's trading after hours, and this is after the top Justice Department antitrust officials have decided to ask a judge to force Alphabet's Google to sell off its Chrome browser in what could be a historic crackdown of one of the biggest tech companies in the world. And this is according to people speaking to Bloomberg, that the department will be asking the judge who ruled back in August that Google illegally monopolized the search market to require measures related to artificial intelligence and its Android smartphone operating system. So we'll be watching those shares. In the after-hour session, we saw the downside of 0.8%. We have more ahead on the Asia trade. This is Bloomberg. Treasuries continue to gain ground a little bit right now in the Asian session. We had seen them broadly higher in the New York session. We had some corporate bond sales, but it was really all to do with dip buying because Treasuries halted that huge sell-off that we've been seeing when 10-year yields were near that 4.5%. 30-year yields also close to their May high. So we're seeing a little bit of upside continue into the Asian session. But property consultancy JLL says that Asia-Pacific commercial real estate investment jumped 82% on year last quarter, the strongest result since the 2022 rate hike cycle began. Seoul and Tokyo were the standout performers. Let's get more on the outlook with Pamela, APAC Head of Investor Intelligence at JLL. Great to have you here in the Tokyo studio.
Thanks for having me.
So we're seeing a little bit of a tricky picture when it comes to the global rate environment. Are we going to see these cuts? When will they come in this broad global landscape? What are we seeing in terms of real estate investments?
Yeah, I think in terms of Asia Pacific, it's very interesting because when you talk about the fundamentals, global investors are very concerned about the whole work from home, return to office situation. But here in Asia Pacific, that's not the case. And added to that, you do have a slightly different rate environment and situation. So the investors have very much anticipated Fed's move in terms of the reduction cycle. It's not necessarily about how much they cut or how quick they cut, but the certainty that this rate environment is beginning to move where the cost of debt is going to be lower going forward.
Are we seeing then larger transactions when it comes to infrastructure fundraising as well?
Yeah, exactly. What we are seeing is the larger quantum transactions and deals taking place in Asia Pacific, which you don't see as much happening in Europe and in the Americas. And across Asia Pacific, the most active markets include Japan, Korea, Australia. A lot of conviction there for all three sectors, three of the main traditional sectors, meaning office, logistics, and retail.
Japan is interesting because it's going the other way, and we're talking about normalizing and raising rates. So how come it's still so interesting?
Well, because it's coming off such a low base in terms of the cost of debt. So you still have a very positive, accommodative spread between cap rates for the assets as well as the cost of debt. Also a positive spread when it comes to the risk-free rate, which is essentially looking at the 10-year JGB. Going forward, even though we know that the BOJ is likely going to marginally increase, but you're still talking about a very rare opportunity to find that positive cash on cash that doesn't really exist in any other market currently.
Are we seeing most investor interest still focused on Tokyo, or is there sort of a broadening out of that?
Yeah, outside of Tokyo, I would say Nagoya, even Fukuoka, outside of this main market, the other submarkets are attracting a lot of attentions. One other thing I didn't mention yet is the hotels transactions, also a part of what we're looking in terms of the capital market transactions. Because of the surge in tourist arrivals and continue to see a lot of that demand coming in, those type of assets are trading really well, with RevPAR improving, with room rates going up, and we do see that continuing for some time to come. And what we've also seen is there have been a lot more foreign investors interested in investing in Japan, not just because of the cheap cost of debt, but because of the growth that they believe in continuing to see in the Japanese economy going forward. We have, of course, seen now a sustained level of inflation, and we've heard that wage inflation will likely continue to be the case here. All of those are support towards the fundamentals and increasing rental growth, which is why investors now can see investing in Japanese real estate as a hedge to inflation and not just as a proxy for fixed income.
Yeah, it's really interesting that 42% of all hotel investment in APAC coming from Japan. Where else do you see the hotspots across the region?
Yeah, I think one that surprised us very much in terms of strength is Korea. So Korea has this situation where you have office fundamentals being the strongest. Just in terms of the rental growth for Korean offices alone, it went from pre-pandemic till now, we can record over 50% in terms of rental growth. Now, that is a result of having a low supply, very little in the pipeline, and then you have opposite of that, which is the logistics and industrial space. There is an oversupply situation, which creates opportunities from a pricing standpoint, especially when it comes to foreign investors looking at opportunities. It's a really good entry point. And so in Q3 alone, we saw a surge in overseas investors' interest moving into Korea, taking advantage of that opportunity.
You mentioned logistics, for example. We have seen that increased interest, especially given e-commerce, not to mention, of course, the build out of digital infrastructure, renewables infrastructure. How big of an opportunity is this across Asia Pacific?
It is massive. I think even to say massive is an understatement, because when you look at the overall allocations of all across all different sectors in real estate, the office has increasingly moved slightly lower. And where is the allocation going? When it comes to the global allocation, you see things going into multifamily and the living sector, but that is very small and less mature in Asia Pacific. And it is all moving into logistics and industrials. A lot also trying to move into alternative space. And within the alternative space, data centers is by far the most dominant.
Pamela, great to have you here in the Tokyo studio, APAC Investor Intelligence Head at JLL. We have more ahead on the Asia trade. This is Bloomberg.
Let's take a look in the meantime of some of the other stories that we're following. Ukraine's allies are pushing Vladimir Zelensky to consider new ways to get Russian President Vladimir Putin to the negotiating table. Two European officials say there's growing recognition that the Ukrainian leader needs to compromise as neither side can secure victory. We're told that German Chancellor Olaf Scholz also urged Putin to engage in peace talks in a recent phone call. A Singapore court has sentenced oil tycoon Lim Un Kun, also known as OK Lim, to 17.5 years in jail for cheating HSBC and instigating forgery. The judge says a deterrent sentence is justified and no concessions would be made for Lim's medical condition. The 82-year-old founder of Hin Leong Trading is appealing. Lim and his children earlier agreed to pay $3.6 billion in a separate civil case. Lebanon and Hezbollah have reportedly agreed to a US proposal for a ceasefire with Israel, with some comments on the content. An aide to the Speaker of the Lebanese Parliament told Reuters that a written response was delivered on Monday to the US ambassador. The proposed terms require Hezbollah to have no armed presence in the area between the Lebanese-Israeli border and the Litani River. According to the report, there has been no immediate response from Israel. Shery.
Haidi, take a look at how EU futures are trading in the Asian session right now. Of course, we continue to watch the euro at a time when we are seeing increased pressure on the currency. We are expecting those rate cuts from the ECB next year, not to mention, of course, the European Union's economic and political issues. Right now, we're seeing a little bit of upside for futures at a time when, of course, The dollar and the euro are holding steady. Former St. Louis Fed President James Bullard says monetary officials don't have to move much to arrive at the right rate for the economy, but he tells Bloomberg he's not expecting the Fed to stand pat next month.
If it was me, I think they could make one more move here in December, and then that would put them at 4 3/8. And then there'll be a debate about where neutral is. But if you thought the median of the committee thinks neutral is maybe 3%, then you have to have maybe 100 basis points on top of that, because, or 125 even, because inflation isn't all the way back down to target. So normally you would take the inflation difference and then multiply that by 1.25 or 1.5 or something like that. And that's what a Taylor rule would do. That's going to put you right around 4%. So they'd actually be pretty close to where they'd want to be. They'd have another move to make maybe in the first quarter or second quarter. And then after that, it would depend on where inflation went during 2025. So they're in pretty good shape here, I think, for the December meeting.
Jim, maybe for December.
Former St. Louis Fed President James Bullard there speaking with Bloomberg's Lisa Abramovitz. More ahead on the Asia trade. This is Bloomberg. Have crossing the Bloomberg the November meeting minutes from the Reserve Bank of Australia. The RBA saying that the cash rate is being seen as appropriate. They've talked through some of the policy scenarios, but that the core policy settings are appropriate to reduce inflation, which is, quote, still too high. Also talking to the sort of vigilance to upside inflation risks, that the CPI goal remains their top priority, that it's important to avoid the over-reliance on backward-looking information. The key is to keep policy restrictive until there's confidence when it comes to CPI, and there's no immediate need to change the cash rate target. And it's interesting because we have seen kind of traders angling to see if there's any gleaning of signals in these minutes that might suggest changing to the market pricing as to when that easing cycle could begin. At the moment, I believe pricing is sort of sitting around that second quarter 2025 timing, but the RBA is saying the risks around these forecasts that they've got at the moment are balanced, but really the sort of hesitance that we continue to see from the central bank in Australia in the outlook really reflects the policy meeting being held on the day of the US presidential election. That proposal from President-elect Trump to raise tariffs on China, potentially upending again global trade, and of course such big implications for an externally exposed, export-reliant economy like Australia that counts China as its biggest trading partner. Shery.
Yeah, no wonder we saw Goldman Sachs lowering their forecast for Australia's economic growth next year to 1.8% just this week. Take a look at how the ASX 200 is trading at the moment. We're seeing broad upside when it comes to Asian equities, but tech stocks and energy stocks leading the gains on the ASX 200, while the Nikkei is also up 0.5%. We're seeing also some upside across Asian currencies at the moment. Haidi.
Yeah, let's take a look at HSBC, because Shery, Bloomberg's learned that the bank is asking hundreds of managers to reapply for jobs in the new corporate and institutional banking division. The bank is continuing to try and streamline operations. Let's get more from Bloomberg Intelligence senior analyst Matt Ingram. So, is it necessary? Is it going to be effective, given how many rounds of this sort of restructuring we've seen already?
Yeah, g'day Heidi. Look, this goes all the way back to Stuart Gulliver days 15 years ago. HSBC was present in 7 countries in 1875. It's now present in about 60. This needs to be done. There are still those fiefdoms that were formed in those intervening 100 years. There's clearly still a big cost problem, and that's centred on this corporate and investment bank. The way to do that is to look at which management you can cut and which management you can't. So clearly there's too much management within that global and sort of business line matrix that HSBC has.
In terms of the capital situation, what can we expect to see? It's interesting, we were talking to Stan Chart's Bill Winters, right, talking about the big question mark that remains over China, which of course HSBC has also strategically over the years really positioned to get maximum exposure from.
Yeah, look, I think shareholders have shown over the years with both these banks and others, they'd prefer to receive the capital back than see the bank deployed in places where the risk appetite is too high. So Standard Chartered's got a big buyback, HSBC's got a big buyback. I think with slowing global economies, you can expect that they're going to give that excess capital back to shareholders. And that's, I think, what shareholders want to see.
What are we expecting in terms of more challenges for this bank in this rate environment where we're seeing more easing around the world?
Yeah, thanks, Shery. Look, on the back of what Haidi was talking about a minute ago, I think the markets are pointing to a one-way street to rate cuts. I think central banks are being a bit more cautious about do they continue cutting. Clearly on the balance, though, I think HSBC's revenue challenges are still significant in 2025 and 2026. I think we're expecting 75 to 100 basis points from the Fed. That's got a nearly $3 billion impact on HSBC's top line. So they're going to have to find that somewhere else to support this return on equity and keep these buybacks coming. Clearly the place to do that is probably going to be to look at their middle layer management and say what can we cut and what do we have to keep.
Bloomberg Intelligence Senior Analyst Matt Ingram there with the latest on the HSBC. And these on some of the other stories on the corporate front. Goldman Sachs talking with potential partners as he plans to spin out its digital assets platform into a new company. Goldman's global head of digital assets, Matthew McDermott, told us plans are in the early stages, but the target is the next 12 to 18 months. Electronic trading platform TradeWeb also says it will work with Goldman on new commercial use cases for the platform. Xiaomi's quarterly revenue surpassed expectations as the smartphone company gained a foothold in the cutthroat EV sector it entered in March. Xiaomi says sales rose 31% to nearly $13 billion in the September quarter, with over $1 billion coming from its EV business. It also kept its spot as the world's third largest smartphone maker, with handset shipments up 3.3% in the quarter. China's biggest express delivery company, SF Holding, is planning to raise nearly $800 million in its Hong Kong listing. A filing shows it's offering 170 million shares at up to $4.66 apiece. Trading is expected to begin on November 27th. Meanwhile, sources tell Bloomberg a Xiaomi unit is among the cornerstone investors in the share sale.
Shery, let's get back to Hong Kong now, where a court will today sentence dozens of former democracy advocates in the city's largest national security trial. We'll be looking to see the reaction from the international community as well. No doubt concern and condemnation will be expressed by Western leaders. Let's get you the action from the ground. Our China correspondent Min Min Loan joins us now from outside the West Kowloon Magistrates Court. Min Min.
Hey, it's a very rainy and cold morning here, but that didn't stop many people from waiting, queuing outside the courthouse, pretty much wrapping around this building, hoping to get a spot at the public gallery. And you can hear behind me the police actually controlling the crowd, allowing people to start streaming in now. We're about 1.5 hours away from the start of the sentencing. It is something that is unprecedented, at least the scale of it. 45 of these pro-democracy activists that will be sentenced today, 47 of them have been arrested in January 2021 for participating in this unofficial primary election, and the defendants' goal at the time was to try to secure a majority in the Legislative Council to be able to block the city leaders' agenda. But then they were arrested, and out of the 47 arrested, 16 had pleaded not guilty, and in May, 2 of them were acquitted, 14 of them found guilty, and the remaining 31 had pleaded guilty earlier in the hopes of getting a reduction in their sentences. There are a couple of big names that you might recognize. One of the most high-profile ones is Benny Tai. He is accused of being the brains and the principal organizer of that unofficial primary election. And if he is convicted of being the principal offender, he could be charged or sentenced to between 10 years or up to life in prison. Another very prominent name is Joshua Wong, the former student leader, the face of the umbrella movement in 2014. His lawyer is asking for his sentence to be reduced by a third on good behavior, and saying that while he was a participant in that unofficial primary election, he did not assist in the organization of it. And if he is charged with being an active participant, he could face between 3 years and 10 years in prison. And other people who are charged with being a common participant, they could face less than 3 years in prison.
And we're hearing those concerns from world leaders already. Take a listen to the UK Prime Minister.
I'm very pleased that my Foreign Secretary and Foreign Minister Wang met recently and discussed respective concerns, including human rights and parliamentary sanctions, Taiwan, South China Sea, and our shared interest in Hong Kong. We are concerned by reports of Jimmy Lai's deterioration health in prison.
Min, what other reactions are we getting from the international community?
Yeah, I'm not sure whether you could see in that clip, but the British press were abruptly led out of the room just as the British Prime Minister was expressing his concern about the health of Jimmy Lai, who is one of the defendants who will take to the stand tomorrow for a different case. But of course, this case is getting a lot of attention, not just locally, but globally as well. You have countries like the US, for example, saying that this trial is politically motivated, asking for the defendants to be released. And that's partly because a number of conditions around this trial is quite departure from common law tradition. For example, many of these defendants have already been in jail for about 3 years or more. They were denied bail. They were denied a jury trial. They are being trialed by 3 handpicked judges, handpicked by the chief executive, John Lee. And of course, you have countries, you have this exodus of foreign judges from the Court of Final Appeals as well. And the business community also watching this very closely about its implications on economic freedom, for example, because that rule of law, that openness and that independent judiciary has really been part of what underpinned Hong Kong's status as a key global financial hub as well.
Our China correspondent Min Lo there. More ahead on the Asia trade. This is Bloomberg.
Climate change isn't going on pause for the next 4 years, and what was clear in that room of the world's largest economies is none of them are slowing down in the race to dominate the global clean energy race. So the U.S. is either going to show up with all its might and try to win that for its businesses and its workers, or we're going to take a step back and watch other people eat our lunch.
U.S. National Climate Advisor Ali Zaidi speaking with Bloomberg TV in Rio de Janeiro. We have more than a week now into the COP29 negotiations, and tension is rising as delegates try to agree on a new annual climate finance goal for the developing world. And the upcoming change of government in the U.S. is also opening up an opportunity for China to align with Europe to counter Trump. Let's get the latest from Bloomberg NEF head of APAC research, Ali Izadi. Ali, so what have we seen so far at the COP meetings, and what can we expect this week?
So the COP29 started with initially good level of progress, particularly around carbon markets, Article 6. But now it has been bogged down into the tricky negotiations around the climate finance pledge, as well as the final communique that's supposed to come out of this COP. On the climate finance side, so this is about negotiations around coming up with a new target to replace the original $100 billion climate finance target that was set way back in 2009. That $100 billion was targeting climate finance to be achieved by 2020 and beyond. That target was met a bit later, but it was met, to be noted. This time around, they're trying to increase the target, but also address challenges around the scope of who is contributing and who are the recipients. On the contributors and the recipients, most of the negotiations around including China, as well as a few of the wealthy Middle Eastern economies, such as the UAE. On the contributor side, while the recipient list, they want to narrow down the scope to emerging markets, excluding the likes of China and other economies that are well off, again, Middle Eastern economies. On the contributors and the recipient side, We expect that there is room for some level of progress. So we're rating our expectations around 5 out of 10. But in terms of the structure and the amount, this is where things are a lot more challenging. A lot of numbers have been thrown around, with the minimum being $1 trillion per year. But we've already heard from particularly developed economies that they're concerned that it's going to be difficult for them, particularly if the developing economies are expecting that a higher share of that amount to come in the form of grants and support from sovereign nations rather than contributions from private financial institutions.
Is there some danger to the sort of recommitment to the fossil fuel transition that we're looking at?
Symbolically, yes. So it was quite a symbolic victory at the last COP that the UAE hosted, where there was an explicit language around transitioning away from fossil fuels included in the COP communique. This time around, from the beginning, we have seen pushback from the likes of Saudi Arabia that don't want to reiterate that goal. In their view, that's just one of the options of tackling climate change, and they rather not have that language be repeated in an explicit manner. However, this is more of a symbolic signal. If you look at the reality, even a lot of the economies that have pledged support, including the EU, as well as the US under the Biden administration, as well as Canada, Australia, all these countries that have pledged to move away from fossil fuels, in light of higher inflation environment and the cost of living crisis, they have actually ended up increasing fossil fuel support, for example, via lowering taxation on things like gasoline and diesel for consumers. So that's why even for countries that say they want to transition away, at least in the short term, we haven't really seen their words being continued with real action.
Bloomberg NEF head of APAC research Ali Izadi there, and Australia is vying to host COP31 in 2026. Let's bring our next guest, who sees a strategic opportunity for the country to take a leadership role on climate in the Pacific region. Joining us now is Wesley Morgan, who's a research associate at the Institute for Climate Risk and Response at the University of New South Wales. Wesley, really great to have you with us. And I mean, it's compelling, isn't it? Because we know that Canberra has been trying to have a more dominant position across the Pacific, particularly at a time when we're seeing, far more assertiveness from Beijing across the region. How compelling would the idea of being able to offer a climate solution to a number of these countries be?
Yes, I think that's right, that, Australia is the largest member of the Pacific Islands Forum, so works closely with Pacific Island countries to tackle shared challenges. And Pacific Island countries have been crystal clear for quite some time that climate change is their single greatest threat. So Australia has its hand up to host the UN climate talks with Pacific Island countries in 2 years' time, and that will send a signal to the world that Australia is working with Pacific nations as their key security partner, helping them to address their key threat. And Australia will have a positive story to tell because the clean energy shift is well underway in Australia. Right now, 40% of the main national electricity grid in Australia gets electricity from wind, solar and storage, and we're on track for 80% clean energy for the main national grid by the end of this decade. So no one's building new coal-fired power in Australia. We are shifting to a clean energy future, and hosting the UN climate talks is a chance to send that message to the world.
At the same time, though, Australia has emerged again as one of the biggest exporters of fossil fuel energy, and Pacific nations don't benefit from that. They see the downside and the adverse impact of that. So does that gap, those tensions, sit uncomfortably here?
It absolutely does. So right now, Australia is one of the world's biggest exporters of gas and a major exporter of coal. Gas, coal and iron ore, two major economies in Asia, are key exports for Australia. But what we are seeing is that as countries like Japan, like Korea, like countries in our region make commitments to cut their emissions, they will want less and less fossil fuel imports from Australia. What they will want is critical minerals that will be important for manufacturing of clean energy technologies. So Australia is blessed with the critical minerals that are important for solar voltaics, for wind turbines, for electric vehicles, for batteries. And the reality is that the Australia's exports are going to shift away from fossil fuels towards these other types of exports. And so hosting the UN climate talks, it would be a chance to grow new markets for Australia's clean energy exports for things like green hydrogen, green iron, green metals, and a chance to attract new investment as well. And this is certainly a tension that Australia will need to resolve with Pacific Island neighbours, as Pacific Island countries are calling for a rapid global phase out of fossil fuel production and a managed phase out. So yes, hosting the talks will not be without its challenges, but a chance to signal to the world that Australia is shifting from its past as a fossil fuel heavyweight to its future as a clean energy powerhouse.
How much of a challenge could the incoming president in the United States, Donald Trump, be in these negotiations, especially come 2026, and how uncomfortable could it get for Australia?
Yeah, I mean, the president-elect in the United States is a climate change denier. You know, he refers to climate change as a hoax and has said that he wants to take the United States out of the Paris Agreement. What this means is countries like Australia, they really need to step up to the plate. So Australia is a middle power in global affairs. We'll never be able to throw our weight around like major powers. And we have a strong national interest in a rules-based global order. So that means when countries come to agreement on things like trade, things like security, our interest is in countries sticking by those agreements that we have made together. And the same can be said for climate. So it took a whole generation of multilateral negotiations between the world's wealthy nations and developing countries to arrive at the 2015 Paris Agreement. And it is really the key mechanism that we have to cooperate, to tackle the climate crisis, to work together to drive down emissions. And Australia will need to join other responsible powers and reinforce commitment to the Paris Agreement. And the reality is that, you know, Trump would only be doing harm to the United States' own interests, because tomorrow's economy is a clean energy economy. And we're well and truly in a race now with major powers racing for advantage as the supplier of the clean energy technologies that we will all be using tomorrow. So Australia will see that as being Australia's future, and will continue to pursue that.
And in pursuing that, how much is the Labour Party and the Australian government right now doing in terms of climate funding? Is it enough?
Well, you know, obviously this year's UN climate talks finance is top of the agenda. So this is the grand bargain that's at the heart of the global cooperation on climate, is that wealthy nations will provide resources to poorer countries to help them to shift to clean energy as well. I mean, that's the only way that we're going to be able to address this crisis. So all wealthy nations have a responsibility to step up to the plate. Australia has just announced a new $125 million package to help Pacific Island neighbours shift towards renewable energy. But Australia certainly could be doing more. So, you know, Australia is taking on a role in the climate talks that are underway right now in Baku. Australian climate Minister Chris Bowen is he has been tasked with helping to find a landing zone for the finance negotiations in Baku. So taking on a leadership role there as well.
Wesley, we'll have to leave it there, but really appreciate your time. Wesley Morgan, Research Associate at the UNSW Institute for Climate Risk and Response. More on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. More ahead still on the Asia Trade. This is Bloomberg.